In our top business story, the start of 2016 has signalled another loss of growth momentum at UAE non-oil private sector firms, with business conditions improving at the weakest rate since March 2012. According to the Emirates NBD UAE PMI data, the slowdown was due to relatively subdued rises in new work, which was linked to the stagnation in new export business. Growth rates for output and employment also eased, though stocks of pre-production items increased more quickly. On the price front, tariffs dropped again, with firms able to offer discounts amid muted cost inflation. Commenting on the findings, Emirates NBD economists stated that the slowdown in non-oil sector growth in the UAE over the last few months is in line with expectations, as uncertainty about the economic outlook and low oil prices weigh on consumer and business sentiment, and as the strong US dollar continues to impact demand from emerging markets. Falling from 53.3 in December to 52.7, the headline Purchasing Managers Index was at its lowest level in 46 months during January. The latest slowdown continued the recent trend seen across the sector as a whole, with Q4 2015 the weakest on average in over 3 years at 53.9. In addition, the survey found that the rate of hiring was the slowest in almost 4 years at the start of the year. Ratings agency Fitch has reaffirmed Abu Dhabi's AA credit rating, pointing to the country's vast sovereign wealth fund holdings as an ample buffer against the low oil price. While the country's fiscal deficits have widened as the collapse in oil prices drives government revenue lower, Fitch said that a mix of subsidy reforms, drawdowns on reserves and government-related entity deposits and new local debt issuance mean that the shortfall is manageable. Fitch also said that the issue ratings on Abu Dhabi's senior unsecured foreign currency bonds have been affirmed at AA. Meanwhile, in Qatar, the slowdown in the country's huge infrastructure spending will hit the banking sector this year, according to Standard & Poor's, which stated that operating conditions for Qatari banks will toughen as the Qatari public sector withdraws some of its deposits from the domestic banking system. Qatari banks have experienced double-digit credit growth over the past few years, but analysts have worried that local credit markets could now be saturated as the country's loan-to-deposit ratio rises to above 115%. Dubai developer Nakheel has awarded a construction contract worth nearly 1.4 billion dirhams for the Palm Gateway, a new 3-tower residential, retail and beach club complex at the foot of Palm Jumeirah. Nakheel has appointed SsangYong Engineering and Construction and the China State Construction Engineering Corporation to carry out the work, which is expected to begin in Q1 2016 and take just over 2 years to complete. The Palm Gateway includes 1,265 luxury homes across 3 high-rise buildings to be constructed on top of the existing Palm monorail terminal. Apartments ranging from 1 to 3 bedrooms will be available on lease. According to a statement released by the developer, the waterfront living and leisure complex will be set in landscape grounds and will also have an abundance of retail, dining and health and fitness facilities, including parks, pools and sports courts. And Emirates Airline has come out on top again as the world's most valuable airline brand, according to the 2016 Brand Finance Global 500 report. Emirates said in a statement that the airline's brand value grew 17% over the last year to reach $7.7 billion. For the 5th year running, the airline has steadily risen up in the global ranking of the world's top brands to be placed at 171st, 47 places above the next closest airline brand. Emirates also retained its position as the most valuable brand in the Middle East, with the brand value more than doubling since 2009 when it first appeared on the report. Commenting on the rankings, officials from the airline stated that it has been able to differentiate the Emirates brand not only through marketing and sponsorship initiatives, but also through a combination of quality products and services and technology-driven customer initiatives. The CEO of Brand Finance added that its analysis shows that Emirates is more popular than ever, with its growth this year building on impressive historic trends, which suggests that by 2020 it could become the first Middle Eastern brand to enter the top 100 of the ranking.